Morning, everybody. Happy Thursday. It's Feb 13th, and we we've got some more dispersion of things taking place here this morning. A couple of, I think, interesting uh, ideas alongside that we are entertaining. So we will share those thoughts with you here in just another minute or so. Good morning again. Hope you guys can hear me okay. And then we should be ready to get started here in just 1 minute. All right. Very good. Okay. Good, good. Yep. Just a few more seconds and then we'll get started here. Good morning, everybody. All right, perfect. Let's get started. Good morning, everybody. Hope you guys are doing well. This is our Set the Market morning show. Serge Berger here from the Steady Trader. And what we're doing here, we're going to go look at the top things on our screens and our conversations with clients and funds and family offices and hedge funds and things like that. So let's get started. If you're brand new, please make sure you subscribe to the channel. That gives you alerts in real time when we go live and do these sessions. And also, please give us a thumbs up, like, very important. I actually want to quickly, before I go anywhere, I want to quickly show you or point you to a podcast interview that is an absolute must-watch, in my humble opinion, that I did with a gentleman called David Shastler. He's from Van Eck Funds, and I'm going to quickly drag it over here into the main screen so you guys can see it. It's this one right here. I'm going to post the link in the chat box here so that you can have it and watch it. I would really encourage you to watch this. Obviously, it's from our podcast, steadywealthpodcast.com. But I would really encourage you to watch it. Clearly, people seem to like it. We've got almost 4,500 views so far over 2 days. Watch it, listen to it, think about it. We cover investing in AI. We cover investing in a higher inflation for longer environment, and we're talking about energy, uranium, all that kind of stuff. So please go check that out. I just put the link inside the chat box. Read it, watch it this weekend or whenever you get a chance, today or tomorrow, soon, because I think it's some really, really pertinent points. And clearly, you're not the first one to watch it. We've had 4,500 people almost watch it, so probably worth a watch. All right, what's going on here this morning? I want to start off with a couple of specific trade ideas that we're looking at, and I do want to update you guys on gold. Tesla. I want to update you on Newmont Mining, and then I want to go into the commodities and oil and what's going on there, because I think there's some confusion there when people look at the price of oil over the past couple of days, which is really has a different reason why that's down in our view and versus other commodities floating higher. So first of all, let's have a look at the price of Boeing. So we're using our Market Rover for this. If you have a Market Rover subscription, you go ahead and maybe pull it up here in parallel as well. But I want to point out to you that shares of Boeing on the Market Rover are no longer in a bearish trend. They're coming out of a bearish trend. They're now in a neutral trend. I would not be surprised if this is going to be one of those beneficiary stocks where, again, at the margin, we're seeing money flow out of mega cap tech stocks. We talked about it all week here in the Set the Market Morning Show. Money's coming out of Apple, Microsoft, um, Alphabet, and so on and so forth. So that doesn't mean these companies are bad companies. It just means that that's what's happening. And also that money is going into China. It's going into German stocks. There's so much money in those stocks that it's really like they can go pretty much anywhere else and cause a bid. And that's, I think, to some extent of what's happening. And there's obviously other influences. I don't want to say that's the only thing, but that is a big influence. And that's why we are very concerned about the U.S. stock market's volatility this year. We're not calling for crashes, but there's a huge difference between a U.S. economy that's doing well. It'll slow at some point at the margin, I would imagine, but that's not really happening yet. We keep having these rolling recessions, which is why it's been such a weird environment. But it is what it is. So the economy is not falling off a cliff. What is happening is that we have this crazy market cap concentration, which is just not normal. And so that's why I think we could have a lot of volatility this year. That's why we're calling it the year of the trader. It's also why I'm so concerned about lots of retail investors who think they can do this themselves, who've done very well for the past 10 years, just being long the S&P because a few stocks have floated higher. Once that environment changes, a lot of people are going to blow up their accounts and to have horrible performance in their longer-term nest egg as well. So that's really what we're trying to educate people on. But Boeing is potentially one of those beneficiaries. Now, one could have all sorts of fundamental views on this, or even ideological views of why Boeing may not go higher. There's the flows part of it that's also important to keep in mind. So we think Boeing could be a beneficiary. If you look at it near term on the market rover, again, neutral trend, not bullish trend, but it all starts, as you guys know, with momentum. So if we use our momentum work, so we use what's called our TSD trender indicator. If you don't have it, again, please reach out to our staff and they can give you access to it for a small annual fee. Here is our momentum buy signal in shares of Boeing. It remains valid for the most part. We got that buy signal in November, and the stock so far is up. Actually, hold on. This looks like a weird ticker. I think I might have called the wrong one here. Sorry. Yeah, same chart for the most part, but this one with liquidity. So we had an initial momentum buy signal back in November. That one was good for about 10%. Then we had a momentum sell signal immediately followed by a momentum buy signal, and that one remains valid. The stock so far is up another 9%, so almost 20% over those two trades, and maybe minus 1% loss in between there. So the stock here looks to us like it could be breaking out. Again, we've got bullish momentum, upside targets. We typically go with 5-10%, sort of targets 1 and 2, or even 3 and 5%. So that's one thing we're watching. Something else we're watching very closely is shares of Procter & Gamble. The ticker symbol is PG. This one too, again, could be a beneficiary of stocks, moving out, seeing money rotate out of the mega cap tech stocks at the margin, right? And look at momentum here working like an absolute charm. You see momentum buy signal, stock popped 6%. And this is Procter & Gamble. It's a boring stock, right? But guess what? It's working. Which is very different from Tesla, which is not working. Then we had a sell signal, it was down 7%, and now we're getting a buy signal. And even just back to yesterday's intraday highs, and this would be a valid long in our book by our analysis to maybe somewhere in the mid 170s. So that's two ideas to start off the day. Take that with your cup of coffee. Boeing and Procter & Gamble, both interesting. I realize everyone here that's chasing AI stocks, that may put you to sleep, but at least it hopefully doesn't blow you up, which a lot of AI stocks can very easily blow you up because of the volatility, at least at this juncture. That's not always going to be the case, but right now, that's kind of where we are. So those are two ideas that we're looking at. Then speaking of Tesla, let's quickly just remind everyone what I mentioned yesterday. This stock is 15% of the consumer discretionary sector, 15%. But it's a much bigger weight in terms of investor psychology. So I'm still quite concerned about this stock. I think it could go easily into, towards 300, maybe into the 270s. I'm not a buyer yet. At some point, it presumably will be. I'm not there yet. I still think it's got more downside, and it weighs on trader sentiment. not consumer sentiment. I think I said that wrong. Trader sentiment. So you want to be careful on that. Then we've got Newmont Mining and gold. So we are actually this morning, and I'm not always going to tell you this, but I'm telling it to you. I'm telling it to you right now. We are actually closing our Newmont Mining long that we've had on for a couple of weeks now. From a momentum perspective, it's not. We don't think the stock's going to collapse from here, but we did have a TSD trender momentum buy signal that occurred a few weeks ago. In fact, or mid-January, we then added it to the mock portfolio a little bit afterwards because I didn't actually notice it until afterwards. But here, we're seeing the stock up again, and at pre-market it's more or less flat. But we've now reached our profit targets. I think we had profit targets at 45 and 47, so that's worked well. So anyone that participated in that one should be sitting on a nice profit. So just so you guys know, in case you use the TSD trender, you will receive a trade alert on that this morning to get out of that. Other than that, gold and gold miners and silver, I should say, which I want to talk about as well, they continue trending higher. So there's no real change there. I think this remains something that continues to work, and I see no reason of changing. To me, gold is more of an allocation than a trade, unless it goes completely vertical, which arguably maybe that's what it's doing right now. We'll find out once we have a reversal day, but we're not quite there just yet. Which gets us to commodities and oil. So if you look at you want to write this one down maybe. This is the ticker symbol is DBC. I'm going to go on a longer term chart with you on this one. And the ticker symbol is DBC. Now what DBC is simply the Invesco Commodity Tracker ETF. And when we look at this chart and kind of zoom out, I'm going to make it a weekly chart. What you can see that it's essentially tracking inflation. And so if I were to overlay CPI here, or the rate of change of CPI, then you would see how this is more or less in line with what the CPI is doing. And commodities as an asset class, and I'm going to have to quickly sidebar on oil with you guys here in a few minutes, but commodities as an asset class have largely started sniffing out the higher inflation for longer theme again since basically late summer, early autumn. And DBC, the ETF, is from the lows there to where it is right now, up about 12%. So we think ultimately this plays into the higher inflation for longer theme. We want to be long these commodities, and it's not a single commodities bet that we're making. We want to spread that bet because there is the thing with oil, and I do need to address this quickly. So you saw yesterday how the equity market floated higher. I'm going to quickly show you this. So yesterday morning, this is a 5-minute chart of the S&P 500. The S&P 500 was down about 1% or so at the open, and it basically clawed its way back to almost fully filling that gap yesterday around midday. And this morning, futures are more or less flat-ish. Now, the reason why this happened, in my view, and I remember it's just our analysis, is because of what we heard coming out of the White House, talks with Putin, potentially progress on ending the war. Not my words, just what the media, what we heard out of the White House. And so I think that's why the equity market held up. However, the same thing happened in oil, right? And so actually the opposite happened in oil because end of the war might mean more supply, that kind of thing. So the price of oil here, I do think ultimately there'll be more a bit here, but the price of oil, what I don't want people to think is that they can be long commodities as a basket, as a theme, as an higher inflation for longer, and I'm just gonna buy oil. That's not gonna work, right? Now it may work, but the odds of that working are much lower because oil is like the ultimate sort of bargaining chip when it comes to politics, at least with countries where there is oil, and especially with this Ukraine war, that kind of thing. So I think we need to be very careful by using oil as a proxy for all that. So I just wanted to kind of point that out. If you guys have any questions, please do let me know. Speaking of macroeconomics, and then I'm going to address the couple of questions that I see in here. I do want to continue to point out what we see happening in China. Now, we've been talking about it here for the past gosh, at least almost past month. China, we're seeing a lot more flows, um, a lot more momentum coming into China. And again, you can see using our TST trend and momentum indicator, we got a buy signal in mid second half of January. KWeb, the ETF is up 10-11%. Alibaba, which we've talked about all week for the past like 2 weeks basically. Look at that buy signal we got on 24th of January. Alibaba is up 32% since then. It's reached our initial profit targets at 115. So from our perspective, it means taking some off and then reconsidering. But that continues to play out. And so what I would like to share with you right now is a chart that I would like everyone to just consider it, because again we still see a lot of people not wanting to believe it's S&P only, S&P, every day, all day, every year, every quarter, and that's because that represents your portfolio. Here's the reality, right? And things will change over time. So this is important. The S&P 500 it's doing very well this year. It's up 3% for God's sake, right? The DAX is up 10, and China's up 12.5-ish, using the FXI US listed ETF, using large cap. So this is the year-to-date performance of the blue line is large cap China stocks, ETF, again, dollar-denominated ETF, and then the other line, which is still doing well, it's up 3% for the year, right? Is up 3 is the purple line. Our higher inflation for longer portfolio, I think, is up about 4% year to date, maybe almost 5 actually almost 5, 4.95. So we're beating the S&P so far by 200 basis points. Obviously, silly to make a call here by mid-February, but again, it shows that being allocated to the right part of the market can make a big difference. Stevie's asking, how about selling an out of the money put spread on Tesla? It's not something I would do, Steve. In fact, we have a bear call spread on. If you're a Credit Spread Authority member, we actually have a bear call spread on Tesla right now. I don't know why I would sell a put spread if I still think it's got more downside. Once I see that change and I see sentiment change a little bit, then I would consider doing that. Right now, we have a bear call spread and like the opposite of that. We still think it's got limited upside as opposed to limited downside. Although downside is obviously more limited now than it was, a month ago. That's obvious given the fact that it's already moved quite a bit. But anyway, I think that gets us to about the 15-minute mark, even a touch more. I hope this is helpful. We'll see all of you guys that are in the chat room in the chat room here in about 10-15 minutes, and we will be back here with our Set the Market morning show next week on Tuesday. On Monday is a U.S. holiday. It's President's Day. U.S. markets are closed, so we're not going to do a morning show on Monday. We'll be back Tuesday morning after the longer three-day U.S. markets holiday. So hopefully this is helpful. Please do give us a thumbs up, like. Please, even more important than that, or equally important at least, subscribe to the channel. It allows us to continue to do this, and it allows you to be updated in real time when we do this show. Give us some feedback too. Yes, no, whatever you like. We need to collect as much feedback as possible. And last but not least, please do watch that podcast that I just mentioned before. I'm going to quickly bring it over again. It's this podcast here. Again, what you want to do is you want to click. You just go find it on the channel or click the link inside the chat box. I think you'll like it. It's a lot of great insight that I was able to get out of David Chancellor. He works over at VanEck. They run the big like SMH ETF and some other things like that. So thanks so much for joining. Have a great long weekend. If I don't hear from you before, otherwise we'll see you guys over in the chat room in about 10 minutes, and we'll get this trading day started.